Liam Halligan is in the studio with me right now. I want to hear what our economics and business editor has to make of all of this with On the Money. Liam McCaffrey, how are you?
You get your Irish TV goons mixed up here.
Right, come on then, what's the latest?
I know
what
we all
this...
look the same.
Oh, wow. My name's Patrick, I can get away with that. Right, go on, Europe, economy, talk to me.
So we know that the Bank of England has got another interest rate decision on the 3rd of November. But it's also influenced by major central banks around the world. So the big two central banks around the world are the US Federal Reserve and the European Central Bank, which oversees the 19 countries across the Eurozone, 400 million people or so on. Now, the central bank in America is raising rates fast. They just raised rates by 75 basis points. That's 0.75%. The ECB has this afternoon raised rates by 0.75%. That's its second three-quarter point rate rise in a row. The last one came in September. They also raised rates in June. Their rates are now 1.5%, their central bank rate. Our central bank rate is 2.25%, so a bit more. What does this mean?
Yes.
Why should we care?
Yes.
What this shows is that the global interest rate cycle is still going significantly up. It means the Bank of England is now more likely to raise rates than it otherwise would have been. We think it is going to raise rates. It's probably going to raise rates by at least 0.5%, maybe 0.75%. Now, that impacts mortgages, but what really impacts mortgages is the rate that's above that, which is the government's borrowing cost, and that's set by the markets, right? These things kind of move in parallel. At the moment, the Bank of England's sort of playing catch-up. The mortgage rate is really set by what's happening in the money markets, and we know, even though it looks as if the Bank of England's going to raise rates, we know over the last few days, as I've been saying on the money, throughout yesterday, the day before, we know that the borrowing cost in the money markets is generally coming down. It's still higher than it was, but it's generally coming down. So what that adds up to is if you're about to remortgage, right, or if you're about to refinance a personal loan or get your first mortgage, if you're lucky enough to be getting on the housing ladder for the first time, we all know it's really tough. It might be worth just waiting a little bit to see what happens in the next few days, because I think borrowing costs could come down even more. OK, all right. And just want to give one more to you, because we're going to be talking about this a little bit later on as well, which is potential for a bit of economic good news, dare I say it. Well, I actually was supposed to have brought party poppers in with me, but in the end, apparently it would have set the fire alarms off or something. But you have to get one of those sort of pointy hats or something.
Yeah, exactly. No. Right, OK, so when it comes to...
gone both ways.
When it comes to that, economic good news, you say the price of gas has gone down, is that right?
Yeah, what we've been seeing over the recent weeks, really, it's not really been noticed, but earlier this week, the price of wholesale European gas went below €100 per megawatt hour. That's down from €350 per megawatt hour back in August. Now, €100 per megawatt hour, it's roughly where it was before the war in Ukraine. It's still about twice what it was over the previous 10 years, so it's still elevated, but it's lower than it was.
Right.
And that means that once this period of the price cap is over, your prices there's a ceiling on them paid for by the government between now and April. We know that if you're a business or you're a household. Once that ends in April, there may be some additional help for vulnerable people, but prices may not be as bad as we thought they were going to be after April. So it is good news. And also, Patrick, it gives the government some room for manoeuvre in its fiscal accounts ahead of this big budget statement on the 17th of November, because a really big cost in these fiscal accounts, as you and I have discussed, is the cost of subsidising energy, that energy price cap.
Exactly.
If the price of energy is down anyway, it means the government subsidy is smaller, or there may not need to be a government subsidy.
Yes.
So rather than hundreds of billions of pounds, the energy price cap may cost much, much less, and that leaves more room for uprating benefits and for keeping taxes hopefully where they are, or maybe even cutting them a bit.
Hey, there we go. Going for growth. Don't be daft.
It's got to be worth a crack.
Don't be daft. Yes, all right.